Welcome back to another episode of the Collision Vision, driven by Auto Body News. As always, I'm your host, Cole Strandberg. I'm excited to welcome Nancy Rolland with Focus Investment Banking back for another episode of the Collision Vision. As you might remember from her previous appearance, Nancy is my partner within the automotive aftermarket team at Focus, where she and I work together on M&A and capital raising within the collision industry. Today, Nancy and I are going to discuss M&A activity in 2023, trends as we move into 2024, and we'll revisit what you can do to increase your shop's value and make it attractive to the different buyers out there. Enjoy the show. Nancy Rolland, thank you for coming back to join us here on your second time on the Collision Vision.
Of course. Thank you, Cole. It's a pleasure to be here with you today.
Yeah, great catching up. We rarely talk. That's not true. We talk about every day. So always a fun time to have you here with us on a recorded conversation. For those of our listeners who don't remember your first appearance on the Collision Vision, would you walk us through your background again?
Sure, I'd be happy to. So I've been working with business owners, helping them sell their companies for more than 20 years now. I've worked at 3 different Fortune 500 companies, the most recent of which was AutoNation, where I was part of their M&A team. Spent my time there traveling the country, buying up dealerships for them. And I actually added over $800 million in revenue through acquisitions that I completed. Almost 7 years ago, I was actually recruited to join Focus Investment Banking as part of their automotive aftermarket team. And since then, we have focused and specifically completed over 30 transactions in the collision repair space and paint jobber world.
And we're not slowing down. That's awesome.
We are not.
Very, very good. When we spoke, it was probably mid-year 2023, and we had some thoughts on the industry at that point, some guesses, I think, as to how the year would shape up. From your perspective, how was 2023 for collision repair M&A?
Deal flow was actually lighter than in past years. There were a lot of things going on in the economy that all of us can certainly remember, wars, continual rising interest rates at many points during the year. So I think it just kind of gave many buyers and sellers pause to kind of sit and wait it out a little bit. And so we experienced that for the majority of the year, but activity has definitely picked up. Q4 and moving into 24 looks really, really promising.
Yeah, the way I kind of view it for this year was the first 3 quarters of 2023, there was steady activity, but it was smaller deals. It was add-ons almost exclusively for regional or national consolidators. It felt like in Q4 and coming into Q1 2024 that the tides are shifting a little bit. There's a new wave of the bigger deals coming in. The valuations remain competitive, and there's different types of buyers interested in different types of collision repair opportunities. Talk to me about who's buying what out there right now.
Sure. So there's continual interest from lots of groups and lots of entities. The national MSOs, of course, are still very interested in continuing to fill out their geographic footprints. They're looking for really great sized shops with solid business, DRP relationships, OEM certifications, and great employees. And then, of course, there are many regional groups that Cole and I talk to every week who are also looking to expand their geographic footprint. And then, of course, we have many private equity groups, of course, in the arena already, such as those that back Classic and Joe Hudson and several others that are continually looking to expand their reach as well.
Absolutely. Yeah, I could not agree more. It's for good collision repair opportunities, and we sort of described what those were in Nancy's first appearance on the Collision Vision, and we'll dive a little bit deeper into that before we part ways today as well. But for good collision repair opportunities, there's a lot of interest, and that interest remains and is potentially heightening as we head into 2024. So we hit 2023, I think, pretty well. Talk to me, look into your crystal ball a little bit and tell me what you see as we head into 2024.
So 2024, I think activity is definitely picking up, as we've talked about. Beginning in Q4, we've had lots of interest from many groups who are sizable, either looking to recapitalize their balance sheets. So we may be doing capital raises for them later this year. We have several larger groups, actually one in the marketplace right now, who's gaining significant interest from lots of groups, national MSOs, private equity groups. One thing I will point out is that if you even have a thought that you may be interested in selling this year, while this is typically a relatively quick process for us to handle for our clients, typically 4 to 6 months, we can usually have a business sold from start to finish. Many of the MSOs are already booking closings into June and beyond. So if you're really serious about getting a deal done this year, you really need to get to work.
It's crazy, the backlog that some of these groups have. Because in the past, you nailed it. Historically, like if you go to market in January, you're typically likely to get a first half closing, and still very, very possible. But man, a couple of these groups, their growth plans for this year are unbelievable. And
that's right.
A couple things that you said there, I think, are worth diving a little bit more into. Number one is the conversations around capital raising. That perspective has shifted in my mind, especially for a lot of the younger MSO owners. It's not viewing private equity's involvement anymore as a sale of the business. We're not exiting. It's sort of starting to be viewed as the next step in the business's growth and in the business's life. And I think that's a very healthy way of looking at it. We're seeing business owners who are interested in raising capital or keeping a minority equity interest, but still substantial, as something that's a really viable option for individuals who want to stay involved in the business. And coming from a family business who did the same thing, I get it. And I think that's a very smart way of looking at it. And those conversations are happening a lot as we go into 2024.
That's right. Many of them have realized, it's better to own a smaller piece of a much greater entity than to have 100% of a much smaller entity.
Yep.
So we've had some great conversations with folks about that.
Oh, and for the right personality, right? If it's someone who believes they'll be a good fit in that CEO seat of a bigger organization, there's no quicker way to get there than partnering with a private equity group who's going to help grow and guide that ship. And frankly, hopefully, if it's a great working relationship and we do that dating that we've talked about and making sure you find the right partner, a really good experience for everyone involved. Something else you mentioned was a lot of the big groups, they have significant backlog. Their growth requirements or growth strategy and plan for 2024 is aggressive. Talk to me about some potentially really big transactions coming down the road in the future with private equity holding periods aging with some groups. What are we seeing out there, and what kind of impact do you think that would have on single and 2-3 store operators as they look to sell?
So I think there's still going to be great opportunity for the smaller operators, regardless of what happens with these larger groups. For example, Joe Hudson is in a 4th year of holding by its private equity group. Classic is in a 3 to 4 year holding period already. So even if those two particular entities trade up, if you will, to a larger private equity holding group, there's still going to be great opportunity for smaller 1 to 3, 1 to 5 shops to make a good return on their investment in their company. There will still be large national groups looking for those.
Absolutely. And with as many of these regional groups that are popping up and having financial backers who are becoming more than that, I wouldn't be shocked to see in the next 2-3 years another national player come onto the scene, as well as a shakeup, maybe in the top 5. Maybe there's some trading internally within those groups. Could get really interesting.
I would agree 100%.
In terms of 2024, and again, asking you to break out the crystal ball, do you think we're going to see transactions speed up from where they are today in terms of the quantity and the regularity of transactions happening? Or could there be a slowdown with a couple of these different things looming?
So I think our activity is going to increase, but you're right. The pace at which these national MSOs are able to get transactions completed, particularly if one or two of those events, large events, happen, it will definitely impact closing cycles for prospective clients of Focus even, right?
Sure. Yeah, absolutely. I mean, we can point to in the not too distant past of a couple of major transactions happening within those big five. And you just look at what happened, whether it's Caliber and Abra a couple years ago, Crash Champions and Service King, even more recently. Those are big old bites to chew and swallow. And it's interesting to see how these groups do handle that, how that impacts their existing pipeline and things of that nature. So something to consider for sure.
Definitely.
Let's revisit a conversation we had on your last time on the show, which is kind of a different way of putting the question, how can I make my shop more attractive to X buyer? So I want to talk both about what are consolidators looking for, and we'll do that first. And secondarily, I'd like to talk about what is private equity looking for, because I think that answer might surprise some people. So consolidators first. What are consolidators in general looking for when they're seeking acquisitions?
Sure. So consolidators in general, basically regardless of geographic area, if you will, they're looking for larger facilities. They're looking for shops doing at least 5 million and above. They're looking for DRP relationships. They're looking for OEM certifications. Of course, a minimum standard is ICAR Gold standard. They love to see that across the shops. And they are most concerned about your employee base and what that looks like. So don't be afraid to invest heavily in your employees, because at the end of the day, it is what differentiates you and being acquired from them just doing a brownfield or greenfield in your area, right? It takes a long time to get that shop up to speed. But if they can do an acquisition with you and you have a great staff that can just, continue making money for them day one, it's much more attractive to them than starting from scratch.
Oh, absolutely. We talk about it every day, just about the technician shortage, how challenging it is to staff the shops with good quality technicians. And you nailed it. It's a big part of what your business is worth is your technician base. So investing in that training, investing in hiring, investing in keeping a bullpen of quality technicians is a very clear ROI and a very clear way to increase the value of your business. One other that I think, as I look back on way in the rearview mirror now at this point, SEMA 2023, a topic that came up as well was from a shop owner's perspective, kind of working yourself out of a job. And I think that's a really important thing to remember as well, especially for sellers who are nearing retirement age. You want to have GMs in place. You want to be able to hand over the keys of your operation. And yes, there will be changes, of course, but it's essentially ready to go for your new partner to take over. And that takes some foresight and that takes some planning.
Right.
So we nailed what consolidators are looking for, and that's a wish list. If you don't have all of those items, don't be discouraged. There's interest at levels beneath and above all of those. Sometimes, frankly, we are surprised at what gets some interest that can be well beneath those levels, depending on the rest of the boxes that are checked. Geography, a lot of moving parts, but I think that's really well summed up. Now, the private equity piece of this is interesting to me because I think it's a different answer for what they're looking for than maybe even private equity would give you. But we have real proof that what they're looking for is kind of shifting. Their wish list is evolving. Talk to me about, from your view, what are they looking for?
So in order for us to really get attention from a private equity group that is serious about making an investment in the space that doesn't already have a holding, they're looking for business operators with at least 25 million in revenue, at least 5 million of EBITDA. They want a really good solid management team in place that they can partner with to take to the next level. So they want good operators with good understanding of the business. They want to make sure that you have good financials in place. Many of them will do a quality of earnings. That's what we talk to our clients about. If you're getting private equity group interest, they're going to want to confirm that your financial statements are true and accurate as you've presented them. And so all of those things are important to them. And of course, as Cole mentioned, we continually talk to our clients about how important that dating process is with a potential private equity partner.
It's funny because you look at management meetings, and as a part of the selling process, you're going to have management meetings, whether you're meeting with consolidators, regional buyers, private investors to private equity, and they're all going to take a little bit of a different flavor. But it's funny. The private equity meetings in many cases are really compelling because you're talking about the future of the business. Whereas with consolidators or other existing operators, there's a little bit of that, but the vast majority is the history and where it is today. And so just very different feels. And some are going to resonate with some, others are going to resonate with others, but very different experiences. And I think both are very valuable. So certainly if you check that 25 million in revenue, 5 million of EBITDA, you'd expect a ton of interest from private equity groups. I think even a little bit lower would certainly garner interest. The question does become, they are looking for mature organizations. They are not looking to the same extent for growing organizations. Going a little business school here, it's a business can typically focus on one of two things, and that's profit or growth. To get both is very challenging, very rare. You're in profit mode or growth mode. A lot of these regional players right now are in growth mode. They're growing rapidly. They're spending money. They're building culture. They're acquiring left and right. And therefore, their margins theoretically are going to be lower, at least on a net basis, than what they would be when they're mature. And I think to get to these numbers, you have to go through the growth period and pivot to that profitability period and go ahead and try to milk that thing for all the profit you can to maximize value. And that can take some time, but it's typically a worthwhile investment.
Definitely agree.
All right. We could talk forever. We do. I mean, we're on the phone multiple times a day. A lot of fun stuff happening. I'm thrilled with what we see happening out there in the marketplace right now. Q4 was great. Q1 is starting extremely strong. Anything else we should talk about before we kind of start to wrap up that I didn't hit on?
One of the final things I would say, of course, to anyone out there considering selling, you really owe it to yourself to work with a professional. Many of us advisors like Cole and myself, we are happy to have introductory, calls where you can ask questions. We'll be happy to talk about the process and what we're seeing about valuation. Just keep that in the back of your mind. If you're thinking about it, pick up the phone because we're happy to talk to you.
It's so much better to have those conversations too early than too late.
Yes.
And I would hope that having those conversations, there's going to be some value taken there. And whether that's with a broker or an investment banker, even if that's with your accountant or your attorney, to go ahead and be thinking a couple steps ahead, even if that retirement, that exit is a little ways down the road, you should be planning for it today.
That's right.
Well, Nancy, as you know, we like to wrap up each episode of the Collision Vision with 3 key takeaways. What would those be in your mind from our conversation today?
The first key takeaway I would say is arm yourself with good information, right? Hire professional advisors. Like Cole mentioned, it doesn't have to be us, your attorney, your CPA. Talk to someone else who is out in the industry doing deals, making things happen so that you have an accurate idea of what is really attainable. Second, I would say pay attention to your sales mix, pay attention to your expenses, and don't forget to take care of your employees. They are your most valuable asset.
Love it. That's great stuff. Nancy, loved part 2 of our conversation, I guess, from a few months ago. Really always appreciate your insights. Where can people get in touch with you and learn more about Focus?
Sure. So you can check out our website. It's www.focusbankers.com. You'll find bios of everyone at the firm, including Cole and myself. And you can reach me anytime on my cell phone at 954-610-3410.
Fantastic. Nancy, thank you so much for your time today, for your insights today, and always appreciate getting to speak with you.
Sure. Thanks, Cole.
Thank you again to Nancy Rolland for joining us once more here on the Collision Vision for a bit of a consolidation and M&A update for 2023 and an important primer for what's to come in 2024. Before we wrap up, I wanted to reiterate Nancy's key takeaways, and those are: number 1, arm yourself with good information when you begin thinking about your exit plan. Think ahead. It doesn't have to be coming up super soon to go ahead and be talking to professionals, whether they're investment bankers like Nancy and I, whether they're M&A attorneys or CPAs. Get some accurate information and get a great idea of what is attainable for your business and how to get there. Number 2, pay attention to the sales mix and expenses. Sales numbers are great and important, but your entire financial package, the P&L, the balance sheet, all that fun stuff, are what's going to determine your company's health and, importantly, your company's value. Lastly, don't forget to take great care of your employees. Technicians are among the most valuable commodities here in this industry. Ensure you have and keep the very best. Become the employer of choice for your market. That's all for today's show. If you enjoyed it, please be sure to subscribe and share with all of your friends wherever you enjoy your podcast. On behalf of the Auto Body News team and myself, thank you for coming along for the ride.